Now guys, let's discuss the agenda of this, the S&P 500 technical analysis. Now guys, again let me clear this thing that this technical analysis is not a financial advice of any kind in any form or manner. Secondly, this technical analysis is not an advice to place your trades in the stock market. This technical analysis is heavily based on the technical indicators, and we also consider some other the global or the geopolitical news, okay, that is going to impact the stock market. Whatever money you are making, whether you are making 500% profits within a day or you are seeing 20 or 30% losses within a day, so all profits or losses are yours. So I will not be responsible for any profits or losses because I do not know how you are going to interpret my technical analysis. Now guys, let's discuss the agenda of this, the S&P 500 technical analysis. So the first thing is that I will do this, the S&P 500 technical analysis on the weekly chart. And if we do not consider the weekly chart, then most of the times the technical analysis will not be accurate. Okay, and this is the reason, if you are subscribed to my channel for last many months or for more than a year or two, then you know that I always use the weekly chart and the daily chart in order to confirm or in order to predict the movement in the S&P 500. So after this the S&P 500 the S&P 500 technical analysis on the weekly chart, then I will again discuss the dollar index. See, the dollar index is bullish, but now I will tell you that how it is further going to impact the overall stock market. Not just the stock market, means not just the American stock market or the American indices like S&P 500 or Dow Jones or Nasdaq, but the global stock markets, because the dollar affects all of the currencies in the world. Okay, then thereafter I will discuss I will tell you the S&P 500 support and resistance levels. And guys, once again, but these support and resistance levels are what I have calculated myself by analyzing the last 100 years of S&P 500 data. So earlier it was S&P 90, then it became S&P 235, and then it became S&P 500. Okay, so it has a history of 100 years. So I've analyzed that 100 years of data, and then I've got these are support and resistance level. That is the reason, if you are seeing, okay, that yesterday the S&P 500 it hit this level and then there was a reversal. So these are my levels. Okay, these are not the standard support or resistance level. These are my calculated levels. Okay. So thereafter I will discuss the impact of Russian forces withdrawal from the key areas. Now this is the new thing. Okay, and if you are watching, and guys, once again, if you are subscribed to my channel and if you are watching my this the S&P 500 technical analysis on the weekly basis, okay, then you know that every week I discuss one geopolitical or more than one geopolitical factors or other factors that are going to impact the stock market either immediately or in the near term. Okay, then comes the next part. Then I will discuss the S&P 500 technical analysis on the daily chart. Okay, so earlier it was the weekly chart, means the broad view, okay, the hawk eye. Then now comes the daily chart. So daily chart, we will see what is happening on the daily basis: Monday, Tuesday, Wednesday, Thursday, and Friday. Okay, and then I will discuss the bearish breakout. Okay, so this thing that you are seeing in the picture, this is the bearish breakout. So I have discussed the theory of the breakout earlier, I think last week or last week. Okay, so this was the breakout was supposed to happen, it failed, and then this movement, and then finally this one, and this is the bearish breakout. Okay, and this is the movement. So I will discuss the bearish breakout in the S&P 500 and its impact in the S&P 500 in the coming week. Okay, then finally I will give you the S&P 500 probable movement, means what is going to happen in the SP 500 in the coming week, how the SP 500 is going to behave, whether it will move up or whether it will come down, what will be the levels, okay, and where exactly it will open the opportunities, okay, and everything about the SP 500 movement in the coming week. Now guys, there is one more important thing, that this S&P 500 technical analysis is going to be lengthy. So in order to help you further in the lengthy technical analysis, I have made sections. Okay, if you see, these are the sections, these are the multiple sections. So you can watch any of the section that you want to watch, or you can rewatch, okay, anytime. So these are the sections, and these sections are going to help you. So if you want to skip a part, you can skip, but I will strongly recommend do not skip any of the part, because each and everything contains this, because each and every part contains a lot of information. And again, if you have subscribed to my channel and if you are watching for last many weeks, then you know that I cover a lot of things, okay, in just one part only. So it is not like that it is not like that if I'm discussing the dollar index, I'm not going to consider the Russian forces or the bearish breakout. So I can consider, or I can talk about the Russian forces or the bearish breakout, okay, or the CPI data in the dollar index part. So in each and every part, I give you a tons of information, a lot of information that you are not going to find anywhere on the internet, not through any video, not through any blog, not through any article. So now guys, I'm going to begin with the S&P 500 technical analysis on the weekly chart. Now guys, we are here on the weekly chart of the S&P 500. So let me write it down, the weekly chart. So when I say weekly chart, I mean one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Now guys, let's do the technical analysis of the S&P 500 here on the weekly chart. So first comes the candle itself. Okay, now this is very, very important. Now why the candle is important? If you see this bearish candle, this heavy bearish candle has engulfed the previous, it has engulfed the previous two candles, engulf or engulfing. And if you are new to technicals, then you can relate it to the eclipse. So just like eclipse, okay, engulfing means that what has happened is that this one candle, it has engulfed the previous candle, but in this case previously these are two weekly candles. Okay, so it has completely covered the previous two candles, okay, through its body, through its very, very heavy body, right? So what it means that there are very, very heavy bearish sentiments, okay, because of this engulfing. Earlier, whatever were the sentiments, bearish or bullish, okay, those sentiments are gone. Now the bearish sentiments are going to drive the market. So when I say the market, I mean the SP500. And that is the concept of the engulfing. Whenever one candle engulfs the previous candle or the candles, in that case, the candle that has engulfed, the color of the candle, okay, most likely the second candle that is going to form, it will be of the same color. I repeat, that most likely the second candle or the subsequent candle that is going to be formed, it will be of the same color. Now the shape of the candle, okay, it can be different, but the color will be most likely more than 95 or more, but the color most likely more than 90%, the color will be the red, because it is a red candle. So the next week, the weekly candle, it will be of the red color. It will be of the red color. So I'm not saying that there will be a very heavy candle. There may be a very heavy candle, okay, a bear candle, but we can also see, okay, like the hammer, okay, or like, you know, these kind of candles, but there will be a red candle. That's it. So this thing is 90% true, 90%, historically more than 90% true. Okay, in some exceptional cases, okay, we can see, yes, that there is, okay, a small green candle, but chances are again less than 5%, less than 10% of that, of any green candle to be formed. Okay, so more than 90% chances we are going to see a red candle eventually, okay, in the coming week. So because we are anticipating a red candle, okay, so if you are my YouTube community member, then I will tell you that on what particular day, okay, this red candle is going to be formed. And secondly, I will also tell you the shape of the candle, that what kind of red candle is going to form, if you are my YouTube community member, because as of now I cannot predict the shape of the candle. I need to look into, okay, this like Monday, Tuesday, Wednesday, etc., then only. And because I give the daily analysis of S&P 500 to my YouTube community members, okay, so if you are my YouTube community member, then you need not to worry, okay, I will give you the shape of the candle, okay, and probable closing of the weekly candle. Now guys, once again, if you want to join my YouTube community, then I have given the link in the description and also in the comment section. Anyway, so this was the candle. Now comes the technical indicators. First comes the Bollinger Band. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Because the SP500 has closed between the lower band and the median of the Bollinger Band, this means the SP500 is bearish. Okay. Now comes the second part. Oh, sorry, not second part, but the second indicator. The second indicator is the moving averages. Okay. If you look into the moving averages, there is a clear fan out. Number one. Secondly, the closing of the candle of this, the S&P 500, the closing of the candle is below all of the moving averages. This means that through moving averages, the S&P 500 is bearish. Okay. Now comes the third thing. This is the Ichimoku. Because the closing of the candle, the closing of the S&P 500 candle is below the Ichimoku cloud, this means that through Ichimoku, the S&P 500 is bearish. Okay, 1, 2, 3, done. Now comes some other technical indicators. So some other technical indicators, if you see the stochastic RSI, it is bearish because the K channel is less than the D channel. Okay, it is bearish. The MACD, moving average convergence divergence. MACD is moving average convergence divergence. So this is the MACD. Okay, overall on the broader scale, the sentiment means the MACD is bearish, but the MACD is still trading above this signal. So earlier it was 59 and then 83, then it was 69, 80. So looks like that within in next 1 or 2 weeks, okay, we'll be able to see a crossover in this the MACD and the signal, and then it will be bearish. But other than that, okay, what we are going to notice is that on the weekly chart, if you see that the bullish momentum, okay, the bullish momentum is fading up. If you see that these bars are light green bars, so bullish momentum is fading up, and bearish momentum or the bears are taking control of the entire market. Because the MACD is above the signal, so the directional MACD is bullish, but again on the broader scale it is bearish. So guys, now what we have seen is that through all of the technical indicators, that on the weekly chart of this, the S&P 500, on the weekly chart of the S&P 500, the S&P 500 is bearish. It is bearish, okay, it is heavily bearish. It is not absolute bearish, it is heavily bearish. So it will be so the S&P 500 will be absolute bearish only and only when all technical indicators, all of them, as of now MACD is directionally bullish, okay, even though the momentum is fading up, okay. So as of now the MACD is not supporting the bear trend, otherwise, okay, everything is in favor of the bear trend. So the S&P 500 on the weekly chart, it is heavily bearish. So now this thing is clear. This means that there are very heavy bearish sentiments. Next week a bear candle, maybe this kind of candle, maybe this kind of candle, whatever. Okay, so I will tell you, okay, this thing most probably, okay, on Wednesday or Thursday, okay, to my YouTube community members, okay, the shape of the candle. Now guys, the second part of the agenda, and the second part of the agenda is the dollar index. Now guys, comes the second part of the agenda. So the second part of the agenda is the dollar index. Okay, last week I have discussed in very detail what the dollar index is, okay, and how the dollar index, okay, works. It works in the reciprocal to the stock market. If the dollar index moves up, the stock market comes down. If the stock market moves up, then the dollar index, it comes down, okay. And again, just a recap, a small recap, the dollar index means when we compare the dollar, okay, with respect to these other currencies, and most of these currencies, okay, these are the European currencies, okay, and then the Japanese yen, okay, and other currencies. So with respect to these currencies, okay, how the dollar is performing, that is what we call as the dollar index, okay. Now because the situation in the Europe, okay, it is worse than the situation in the US. This means the dollar is moving up, the dollar is bullish, and the dollar is bullish not because the US economy is doing well. No, the dollar is bullish because the situation in the Europe is much worse. Now the last week, okay, in very detail I told you that because there was a high in the dollar index, then it came down, then finally it was able to breach on 1st of September, okay. So there was a breakout on 1st of September, then it moved up, then it came down, and it has fulfilled the theory of the breakout, and now it is expected to move up, and it did, no doubt it did, okay. So either it was supposed to retrace on Monday, okay, or on Tuesday, but most likely this was supposed to happen on Tuesday, okay. And if you see that on Tuesday, okay, there was a very heavy reversal. So this was on Tuesday, and that is the reason we have seen, okay, a this very heavy downward movement in the S&P 500 on Tuesday, on September 13th. Now if you see that this was the previous high, then there was a breakout, okay, finally it moved up, it came down, okay. So sorry, breakout. So this was the zone. This was the zone. Means it was able to hold inside the zone, and then there was a reversal. And now it is on this the bullish run. Now, guys, the thing is, okay, that technically, okay, the dollar index is bullish, okay, through all of the technicals except this the MACD, okay, and it is going to be bullish. Okay, that's not a problem. Now, when it will break or when it will breach this the psychological mark, okay, that the dollar index has made a this the all-time high on 7th of September, and this the high was 110.51 110.51. Okay, so now in the coming days, okay, when it breaches the 110.51, okay, then it will create a panic in the overall stock market. Okay, not just in the S&P 500 or Dow Jones or the American stock market, but the worldwide stock market, whether it's the European stock market, Asian stock market, doesn't matter. Okay, it will create or it will trigger a panic. Okay, because a breach of this level, okay, this means earlier it was able to give it was able to give this a bullish breakout, okay, because of this level, and then okay, again a bullish breakout. So back to back, okay, two breakouts. Okay, although we are not going to say that this is a breakout, okay, but yes, in some manner, okay, or in some form, this is a breakout. Okay, so this was the real breakout. Okay, so this you can say a small breakout. So back to back two breakouts, okay, in this form, this will create a very heavy impact on the global stock market. Even if there will be some good news on that particular day, this breakout will simply ruin that good news. Okay, then the stock market will not look into that good news. It will simply look into the breach. Okay, now the question is that when this thing is going to happen. This thing is going to happen on or before September 21st, because on September 21st, Feds are going to raise the interest rates. Okay, now guys, I'm really very sorry that I forgot to mention the Feds. Okay, I forgot to mention the Feds in the agenda. So and now I'm going to include the Feds in the agenda. Okay, so I will now comment, okay, on this the Fed's decision, okay, of this the increase in the interest rates. Okay, so first let me cover this the dollar index. So this thing is going to happen on or before, most likely on or before 21st of September. This means that the kind of candle. Okay, in the S&P 500 that I was telling you, okay, a bear candle or so. Okay, so that bear candle, it will get a support from the dollar index because the dollar index will be breaching. This means that initially, okay, in the first 2 to 3 days, okay, we can see a further bear movement in the S&P 500. Okay, now guys, there is one more thing that I forgot to tell you, okay, here in this through this the weekly chart. Because this candle has engulfed the previous two candles, this means that on Monday, on September 19th 2022, on Monday, in the S&P 500 and in the overall stock market, in the Dow Jones, in the Nasdaq, we are going to see a gap down open. Okay, a gap down open. Okay, a gap down open, or irrespective of open, the S&P 500 and the overall stock market, it will come down. So just remember this thing. Okay, so either we will see a gap down open, okay, or the stock market, it will come down irrespective of the open on Monday. Okay. Now we were discussing the dollar index. So the dollar index, okay, these are 3 days. So this way the dollar index is going to impact the stock market in the first 3 days, and thereafter, okay, it will then move up. So if you are my YouTube community member, okay, then I will give you the daily analysis, and I will tell you, okay, what we are expecting in the dollar index and how it is going to impact the stock market, and by how much percentage, okay, the stock market is expected to come down, or the S&P 500 is expected to come down, okay, the percentage points. So this was the thing that I wanted to discuss, okay, with the dollar index. Now guys, the other most important part, okay, it is the Feds. Okay, so that I forgot to mention in the agenda. These are the Feds. So now question is that how the Feds are going to affect the stock market. Okay, so you need to learn, or you need to understand, or if you are new to the stock market trading, then you need to understand that it is the Feds. Okay, It is the Feds who control the economy, who control the money. Because Feds control the money, this means they control the stock market. Simple. Okay. Now, how the Feds are going to impact, or what will be the impact? So if you see that this is the chart of inflation. Okay. So this was what? This was April. So in the month of April 2022, the inflation was 8.3, then it moved up to 8.6, finally 9.1, exceptional. Then it came down and this thing. So if you have, so again, guys, if you have subscribed to my channel and if you have, watched the previous technical analysis, and if you have watched the last 2 and 3 S&P 500 technical analysis, then I have told you that, see, technically, then I've told you that I look into the things technically. Okay, I do not assume anything. So there are many people out there, many experienced traders, and who were saying that every month the inflation will come down by 2% or so, and then by the month of December the inflation will be negative. And I told them that, see, I can guarantee you that by the month of December there will be no negative in the inflation. Secondly, I can guarantee you that inflation is not going to come down by like 2% every month, or this thing, because I trust my technicals. I do not look into the news, okay, or these the things, or I do not assume anything. So I can guarantee you that the inflation is not going to come down by 2 or 3% every month. Technicals are not going to support, okay, that much of up or that much of down, okay, all of a sudden. So that is not going to happen. Okay, so you need to learn the technicals in order to understand this thing. Now the question is that why the stock market is so much of concern of these facts. Okay, that Feds are going to raise the interest rates. See, 75 bps it is on the table, and most likely 75 bps will be there. Okay, simple. Now, surprisingly, we can also see the 100 bps. 100 bps. Okay, but the chances are less than 20%. 75 bps chances are more than 80%. 100 bps chances are just 20%, about 20%. Okay, now why this? So why the problem? Okay, problem comes through the technicals. Okay, what technicals? This is the chart of this is the chart of United States inflation rate year on year, and the ticker is USIRYY. Okay, so you can also add, okay, this ticker in your charts. Okay, now if you notice, so what happens technically? Technically, if you see that the inflation has find some very good support at 8.3. Okay, other than that, if you are new to, okay, this the inflation and this thing, then you need to understand that the standard inflation that the Fed says, the standard inflation is 2%. Okay, the standard or the maximum inflation in any case, the maximum inflation must not breach 2% or 2.25%. Okay, and this is the job of the Feds. This is the duty of the Feds. So this is the responsibility of the Feds, that they need to make sure that inflation must not breach more than 2% in any case. And as of now, what is the current inflation? It is 8.3. Means it is already 4x. It is already 4x. And this problem was created back in late 2020 and in 2021 because of the stimulus. Okay, trillions of dollars that were given through the stimulus. So this inflation was caused because of the stimulus. So Feds have already made a mistake. Well, I will not say that they have made a mistake, but that was the demand of the time. Okay, because that was the COVID, people were losing the job. Okay, and this was the only thing, okay, that means that they have used to support the economy. But this thing has backfired. And now you can see inflation from 2000, so up to February or March. Okay, inflation was 2% or so. Then from the month of March 2021 onwards, okay, we have seen very heavy bullish trend in the inflation, and it went out of control. Okay, out of control of whom? Feds, because Feds are responsible for this thing. Feds was supposed to take appropriate actions in time, but they failed to take, okay, this the appropriate action, and that further resulted, okay, this is a very heavy inflation that hit 9.1. Okay, more than 4.5%. So as of now, the inflation is more than 4x, more than 4 times that of the desired levels. Okay, well, 4 times, that is one problem. Okay, but the major problem is that if you know the technical indicators, and if you know, okay, how to deduce this the okay it is the and if you know how to look into the technicals, okay, how to analyze the technical indicators, then the inflation is holding at 8.3. This means the next month, so the next month will be October. This means that in the month of October, okay, the inflation of the September will be published. Okay, if that inflation comes less than anything less than 8.3, then it will be a relief. It will be some kind of relief to the overall stock market. Okay, not just the American stock market, but the global stock market. However, chances of seeing an inflation less than 8.3 in the month of September, okay, that will be published in the month of October, okay, are less. Now this thing is surprising. So you might be thinking that why? Because everything is coming down. Okay, the fuel prices are coming down. Everything. No, you need to consider many other things. Last week, okay, I mentioned the food. Okay, the inflation because of the food. There is this the food scarcity, the water scarcity, and a lot of bad things happening. Okay, so the oil, the food, everything. Also, these are the constituent. So these are the factors. So these are the factors, these constitutes, okay, this the inflation. Okay, so you cannot say that because the oil is coming down, okay, the inflation will come down. No, if the oil is coming down, then the food prices are so the food prices and the other prices are moving up. So these are balancing the inflation, right? Now the point of concern, it comes through the technicals, because whenever such a situation is seen, technical. See, I'm not talking about the inflation, but if you look into any chart, whether it's a stock or an index like S&P 500 or Dow Jones, whenever you look into a chart, then and if you see that the price has hit the previous level and it is holding, in that case, what will happen? In that case, there will be in that case, the inflation will resume its bullish trend. So I'm not assuming anything. I'm not looking into anything other than the technicals. Okay, I'm just looking into the technicals. I'm reading the patterns, and this is what happens. Because in the month of April, the inflation was 8.3. In the month of August, the inflation came out to be 8.3 again. And if I repeat, if the inflation in the month of September, okay, that will be published, means this is a CPI data, it will be published in the month of October. If the inflation comes out to be anything above that 8.3, even 0.00001% more than 8.3, then no one can save the market. No one can save the entire stock market, the global stock market. No one can save the S&P 500 index or the Dow Jones or the Nasdaq. Everything will come down, because in that case, what will happen? In that case, it will give a signal to the global stock market that the inflation, rather than coming down, the inflation is holding at the key level, that is 8.3. This is what I've told you, okay, already 1 or 2 months ago, that we need to look into these levels, 8.5, 8.3. Again, this is not the concern. Now again, surprisingly, this is not the concern. So you might be thinking, okay, so that I'm saying this is the concern, that is the concern, okay, and now I've mentioned that the global stock markets will come down. So what could be worse than that? The worst thing is that if the inflation further moves up, right, if the inflation further regain its bull trend, and if it further moves up, then this thing will be something, okay, that we will see after 45 years. Okay, this thing has happened back in 1980s. Other than that, this thing will also happen almost after 80 years, I guess. 80 years, yeah, back in the Great Depression. So the depression was 1929 to 1940, the 10 or 11 years of depression. Okay, so the same thing we have seen back in late 1970s, 1980, and in the depression era. Okay, this means that if the inflation resumes its bull trend, then see, the recession is there, and See, you need to understand the recession is there. This is what I'm telling you since January 2022. Repeatedly, many times I've told you that we are in the recession. Okay, since January 2022. Now, earlier the recession was supposed to be like 1 to 2 years maximum at max. Okay, 1 to 2 years. But because of this inflation, the recession will be okay. It can be extended up to 5 years, 4 to 5 years. Okay, this means this is 2022. 2022. Okay, we can expect that, or we can say that the indices will not be able to recover to their all-time high levels. Okay, anytime before 2025 or 26. Okay, at least. This means that overall these the global stock markets, okay, they will come down and hold, and then they will try to move up, then again downward move. Means the sentiments will remain pessimist, the sentiments will remain bearish. Okay, and again this means that this thing is going to create a very bad situation, extremely bad situation, okay, for the global economy, right? And that means that earlier anticipated 1 to 2 years of recession will be extended to 4 to 5, or at minimum 3 to 4. Okay, means at least until 2025. Okay, or 2000, yeah, so 2025 you will not be seeing any relief, and the global economies will be in recession. Okay, so this is with this the inflation. Now, why so why, okay, these are market manipulator hedge funds. Okay, why these people, why they are more fearful? They are fearful because they know that Feds are also concerned about the same bullish trend. They are also concerned about the same bullish trend, because if this thing happens, then the Feds will go more aggressive, back to back 75 bps, or back to back 100 bps, 100 each and every month. And so earlier we were saying the 4% interest rates, Feds are saying 4%. This 4% will then jump to 8%, 7 to 8%. Okay, and in the worst case like 10%. So 10% means that earlier you were paying only 1% interest for your business loan, right? Only 1% interest for the business loan. Now you will pay 8% or 10% interest on your business loan. This means that the loans will be extremely costlier. This means that the businesses will try to avoid taking the loans. Even the people, they will avoid taking the loans. Means people will not buy any unnecessary item. For example, they will avoid buying a Tesla car that that is going to cost $100,000. Rather, they will simply go for a car that is like 40 to 50,000 or maybe 30,000. Okay, or they will go for a used car. Okay, because in that case they won't be having any money, because businesses, they will not be making enough income to sustain. They will fire the employees, and because these are the businesses, they are firing the employees. Employees do not have any money in, and employees, okay, they have the family. Now the employees, they will stick to the basic. Means these the people will buy only the basic or the necessary items that are needed in order to survive. That's it, nothing else. Okay, because they are not going to buy any expensive or any unnecessary item. Okay, businesses are not placing many orders, everything. Okay, so everything will slow down. Means the profit and loss statements, okay, again less profits, less revenue, okay, the less valuation, and everything will come down. Okay, so this is with the Feds. So everyone is now looking at the Feds. Market is fearful. Okay, the market manipulators are fearful. The big hedge funds are fearful. Now this the 21st. So this is the September 21st. Okay, so this September 21st. Okay, we will have to look into what the Fed chairman is going to say. Okay, see, he will be hawkish, he will be bearish. This thing is clear. Okay, almost 99%. Okay, because if he says, or if he even misspell anything, that, okay, that can say, or that can, or miss, or that is hopeful. Because of this the hope, okay, everything will then start to move up, not automatically, but the market manipulators, they will then pump the money. They will then push the entire stock market up, indices up, like S&P 500, Dow Jones, Nasdaq. Okay, so they will again trap, and that will again create, okay, a worse situation for not for the stock market, but for the Feds. Okay, So the Fed chairman, okay, he is very cautious. He is very careful. Not just the Fed chairman, but all of the Fed presidents, okay, of the state Fed presidents, okay, they are very cautious. Okay, everyone is hawkish. This means in the coming means on 21st of September, we need to look into what the Fed chairman is going to say. Okay, particularly, and whether he is going to say that we are going to that the economy will be slow, and whether he is going to accept a recession or not. Okay, or when he's going to accept the recession. See guys, you need to understand the only way the Fed chairman can stop this the bull trend is that he need to accept, he need to admit that yes, we are going to enter into the recession. He need to warn the public, he need to warn the people, he need to warn the businesses. He must formally accept that yes, we are going to enter into the recession and be careful. Okay, and I think that probably either this month or in the coming month, or means by next month, okay, he must admit, he must accept, or he will be forced, he will be compelled to accept this fact. Okay, so the September 21st. Now guys, now comes the next agenda. Okay, the next agenda is the S&P 500 support and resistance levels. So now I will give you my calculated support and resistance levels that are extremely sensitive. Guys, once again, if you have not yet subscribed this channel, then please subscribe the channel and click on the bell notification icon so that you can get the timely updates. And other than that, if you want to join my YouTube community in order to get the daily analysis of the S&P 500, to make sure that you are not going to fall into the traps, to make sure that you are going to make money, and to make sure you feel confident, then you can join my YouTube community, and I've given the link in the description of the video and also in the comment section. Now guys, we are going to discuss the next part of the agenda, that is the support and resistance levels for the S&P 500. Now in the coming week, okay, let's first talk about the resistance levels. So in the coming week, whenever, see, in general, whenever you see a breakout, then what happens? Whenever you see a breakout, then after the breakout, okay, the market, in this case, this is SP500. So the SP500, okay, it has come down, okay, it can further come down thereafter, okay, it may take a retrace. So any retrace that it will take will be up to a maximum of, or maximum to this, the trend line. Okay, in simple words, this, any retrace will be maximum to this, the trend line, right? And also this retrace, okay, or this upward movement, the restricted, this upward movement will be restricted by the trend line, and this will also be supported by this, the lower band of the Ichimoku. This is the lower band. Secondly, the moving averages are also going to reach to this level. This means that this particular level, okay, or this particular level is 3990, and this is the same thing that I'm telling to my YouTube community members again and again, that earlier it was 4110, then it was 4035, and now it is 3990. So 3990 is going to act as a very strong resistance. So any upward movement or any bullish retrace will be limited to 3990. Okay, then thereafter comes an immediate resistance at 3935, 3937. And we also have an intermediate resistance at 3965, but that's not that much strong. So we have 3937. Okay, so we have 3990, we have 3965, we have 3937. Now other than that, because the closing of the candle on the daily basis in S&P 500 was below 3884, okay, 3884 is now going to act as another resistance. So we have 3884, then we have 3937, then we have 3965, then finally we have 3990. So as of now, in the coming week, any reversal should be restricted to 3990 at most. Now guys, let's talk about this, the downward movement. So now we know this, the resistance through this, the upward movement. So the downward movement, yes, that is what we need to talk about. Okay, so first of all, we have this, the 3840, and if you see that that yesterday, okay, on the hourly chart, for like 3 or 4 candles in the hourly chart in this, the S&P 500, the S&P 500 was able to sustain, it was able to hold above 3840, okay, and then we have seen a reversal. And historically, we see that again and again 3840, okay, it has proven, okay, a good resistance as well as a good support. So in this particular case, what we are anticipating is that now on Monday, as we are anticipating first that there will be a gap down open. or irrespective of this the gap down, it will come down. So any downward movement means if the open is above 3840, in that case the downward movement will be again or it will find some good support at 3840. If the open is below 3840, in that case just this the fall. Okay, so I'm not saying 3 or 4% fall, I'm saying just the fall. Okay, because if the open comes below 3840, that was earlier acting as a strong support. Now if the open comes below 3840, then the S&P 500, the Dow Jones and the Nasdaq, okay, they all will lose that a little hope that they have had. Okay, in that case immediately upon open it will come down. Okay, so this is the next support at 3791. Other than that, okay, so not other than that, but thereafter the next support comes at 3736 or 3737. So 3790 or 3791, then 3737. Then we have the next support at 3675, and then finally at 3630. So now again 3630 is in the picture. Okay, it is back into the picture, 3630. Now guys, other than that, okay, if you notice that on June 13th, sorry, this is the weekly candle of the June 13th. So in the week of June 13th, the S&P 500, okay, it came down to this level and this was 3637. Now if you notice, this is what? This is the 200 week moving average. This is the 200 week EMA, 200 week EMA. So last time when the S&P 500 came down, it hit this is a 200 week EMA. The same thing has happened in the Dow Jones, again the Nasdaq also. So when it hit this the 200 week EMA, then there was a reversal. Then overall, okay, this is the reversal. Now if you are watching and if you are subscribed to my channel, and if you are watching my weekly technical analysis, or if you are a member of my YouTube community, then I'm telling you this thing again and again that this time whenever it hits, okay, this is the 200 week EMA, the 200 week EMA will not be able to hold, rather there will be a breach. So as of now the 200 week EMA is at 3685. Okay, so this time it must not be able to hold, rather it should give a breach. Okay, now in the same case 3685, so 3685 comes above 3675. This means that whenever the S&P 500 it will come down for the very first time, it will hit the 200 week EMA and immediately it will see a reversal. Okay, this reversal will be limited to like 15 minutes for 1 hour or so, okay, or for some more time, and then again, so it will hit, it will then retrace and then it will come down. So this will be the movement of the S&P 500, okay, and also the Dow Jones. So this means that in order to hit the 3675, okay, it can take more than 1 hour or more than 4 hours. Okay, thereafter, okay, it will hit the 3630, but because we are expecting the S&P 500 to breach this 200 week EMA and to come down further. Okay, so these are the support and resistance levels. Now we'll talk about the consolidation zone, okay, and other things in the so when we will do the S&P 500 technical analysis on the daily chart. Now guys, I want to share this very important thing with you, that if you know that in the beginning of the video I've told you that this particular heavy fall on 13th of September. So what has happened is that when everyone else, or when most of the retail traders, okay, they have lost money, then my community members, my YouTube community members, they have made a lot of money. So if you want to join my YouTube community in order to get the daily updates, okay, these are text updates, okay, and these are video analysis updates, okay, in order to avoid falling into the traps, in order to make money, in order to trade confidently, then you can join my YouTube community. And this is how it works. So this is my YouTube channel page, and I have given the link in the description of the video and also in the comment section. So when you click on that link, then this my YouTube channel page, it will open. Now in this the YouTube channel page, you will notice that we have this button. Okay, this is the join button, JOIN, join button. Now once you click on this the join button, then you will see that there are these two options: only one midweek update and all midweek updates. So when I say midweek update means the daily analysis. So when I say only one daily analysis, it means that In that case, you will get the S&P 500 analysis only on Monday. And if you opt for this, the all midweek updates, in that case, you will get the daily analysis of the S&P 500 from Monday to Friday. And if you notice that all of my members, or more than 95% of my members, they have opted for the all midweek updates, So these are my members. They have opted for the all midweek updates, more than 95% members, because they know the importance of the daily analysis from Monday to Friday. So I will give you the daily analysis. I will give you these the text notes. I will give you these the video updates, okay, and through which you can keep yourself updated. So you will be very well aware of each and everything very well in advance than those of the retail traders. All of the retail traders, most of the retail traders, they have lost money, and my YouTube community members, they have made a lot of money. Only and only because they knew what is going to come, what is going to happen. They knew each and everything in advance. So guys, you can opt for any of these, and if you want to get the daily analysis of the S&P 500 from Monday to Friday, in that case you can opt for all midweek update, just like 95% of my members, they have opted for. Now guys, whenever you want to join, you can join, and you are welcome. The link is in the description and also in the comment section. Now guys, we are going to discuss the next part of the agenda, and the next part of the agenda is the impact of the Russian troops withdrawal from Ukraine. Okay, impact of the Russian troops withdrawal from the Ukraine. Okay, now while everyone might be thinking that that it is a good news that the Russian troops are withdrawing, okay, from Ukraine, and that looks like that the Ukraine is winning the war. Right? This is untrue. This is untrue. Okay. Why this is untrue? Let me tell you. So this is not true that the Russian troops are withdrawing. Okay, and that the Ukraine is going to win the war, and that everything will be normalized very, very soon. Because as of now, this thing looks like a fantasy and nothing else. Okay, this is not the reality. Now, why this thing is not the reality? You might be very well aware of, okay, this person, that he has never given up, okay, and he has never ever lost any war in his entire career. The thing is that Putin, number one thing, okay, that we know about him. So what we know about him is that he is capable of handling, okay, even a worse situation. Number two is that he has never ever seen a defeat in his life. And number three is that he has changed the rules, that now he can become the president, or he can remain the president, okay, as long as, okay, he is there. What is this Russia, okay, or what is the expertise of Russia, okay, or why this the Russia is very, very important. Okay, the primary thing is the fuel, okay, or the fossil fuels. So we have the oil, we have the natural gas. Okay, these are the primary things. And the Europe is mostly or entirely or heavily dependent on the Russian oil and the gas. Okay, other than that, Russia is also a major arms supplier, okay, to the world. When we say now, when we see that the Russian troops are withdrawing from the from Ukraine, okay, and looks like that the Ukraine is winning. Now that thing again, it looks like, okay, some kind of superficial thing, because we know that this person has never accepted defeat in his life. Then how can he so plainly, so calmly can allow his troops to withdraw and can accept a defeat? Europe needs Putin more than Putin needs Europe. This thing is clear. Okay, and as of now, even though there is a war, most of the European countries are still buying the oil and the natural gas from the Russia. Okay, other than that, Russia has also found, okay, this another partner, okay, that is China. So China is hungry for this oil and the oil and the natural gas. So China needs a lot of oil, okay, and the natural gas. So now Putin has cut off the supply to Europe, and he has redirected the supply to China. Okay, so now as such, okay, we can say that nothing has, or means the overall impact was not as much as we were expecting, or as the world leaders were expecting earlier. Okay, So this means that even if this war goes on for like 2 4 years, 10 years, 20 years, okay, Russia is in good shape. Guys, whatever I'm discussing here, okay, I am going to relate it to the stock market. Okay, I am not supporting the war. I have never supported any war. Okay, I am simply telling you each and everything so that I can tell you how this thing is going to impact the stock market, because eventually we are going to talk about the S&P 500, the Dow Jones, and this is the Nasdaq and the European economies, overall the global stock markets, right? So as of now, the Russia is holding, okay, because it has the oil and the natural gas reserves. Other than that, it is also the major producer of of some rare earth elements that are used in the batteries, okay, in the semiconductors, okay, and in many other things. And that is another reason, okay, or you can say one more reason that why the semiconductor stocks are going down. Putin is not going to accept a defeat. Okay, because there is no reason that he should accept the defeat. Because overall, okay, it comes to the economy. So the Russian economy is holding because the Russia has found another this the customer, okay, and that is the China. So Russia has cut off the oil and the natural gas supply from Europe and has redirected it to China. It means that when there comes the second leg, what? The second leg or the second wave, so sorry, the second wave. Now, second wave of what? Second wave of war. Second wave of war. This was the first wave, okay, then this, okay, this the withdrawal, then there would be the second wave of the war. Because the stock markets, the worldwide stock markets are overall bearish, okay, when this the second wave of this the war, okay, it will come, then there will be a further bearish movement, and then the recession that is already there, it will be worst. Okay, so earlier we were anticipating 1 to 2 years, okay, and recently, okay, in this part of the inflation part, I told you that it is holding, and it is going to be bullish. Okay, again the worst thing. So this the second wave of the war will create a situation where the recession will be again 2025. So we cannot say, so we cannot say that there will be any relief to the world until the end of 2025. Whatever the current situation, the current situation you are seeing in the global stock market, you can say that it is satisfactory or it is good. Okay, you have not yet seen the worst. The worst is yet to come. Now comes the next part, okay, of the agenda, and that is the S&P 500 technical analysis on the daily chart. So now, guys, this is the daily chart, and now I'm going to do the S&P 500 technical analysis on the daily chart. Okay, so guys, once again, if you're not subscribed to my channel, then please subscribe the channel and click on the bell notification icon in order to get the timely updates. And other than that, okay, if you want to get the daily analysis of the S&P 500 from Monday to Friday, then you can join my YouTube community. I've given the link in the description of the video and also in the comment section. So now the S&P 500 technical analysis on the daily chart. Okay, so first of all, let's talk about the candle itself. This candle that was formed on 16th of September, Friday, it is a bearish hammer. What is it? It is a bearish hammer in the upright position. As such, okay, when there is no other condition, okay, in the market, in that case, or in the S&P 500, in that case, what happens is that the hammer is a significator of a reversal. It is a significator of a reversal. Okay. So if there is no other condition, in that case, there comes a reversal. So on the weekly chart, see, this is the weekly chart of the Nasdaq. Okay, so I'm just giving you the reference because the closing, etc., okay, was almost similar to the S&P 500. So in case of the S&P 500 on the weekly chart, the candle that was formed, okay, for the previous week, it has engulfed the last two candles. Okay, this means that now that weekly candle is going to supersede the formation of the candle on the daily chart. This means that even though it is a bearish hammer and it was supportive of a retrace, the heavy bearish candle on the weekly chart of the S&P 500 that has engulfed the previous two candles, okay, that will supersede this movement, and that will say, okay, no, I am not going, or I am not going to allow you to give this this the reversal, okay, or the retrace. Rather, I will force the S&P 500 either to give, okay, a gap down open, or even if there comes, okay, a little bit gap up open, then also irrespective of open, okay, this the weekly candle, okay, this is a very heavy weekly candle, it will push the S&P 500 down. And if you see that, what has happened is that a day before yesterday, on 15th of September, I told my YouTube community members that, see, on Friday we will see a good fall. We will see a fall, irrespective of anything. There will be a good fall, and there will be a good red. So there will be a good red candle. So this is what I told them on 15th of September. Okay, so we were anticipating a 2 to 3% fall on Friday. Rather, S&P 500, okay, it came down to 1.5%, and then, okay, there was a reversal. But even though that was enough, 3 days, multiple times in a week, they have booked the profits. They have made profits back to back. Now let's talk about these are technical indicators. So first comes the Bollinger Bands. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Now, if you see that the S&P 500 has closed in between the lower band and the upper band of the and the median of the Bollinger Band, this means that the S&P 500 is bearish through the Bollinger Bands. Now comes the most important and the most interesting thing, and that is what? That is the moving averages. Now, if you see that there is a clear fan out in the moving averages, okay, it is bearish. Secondly, the S&P 500 has closed below these the moving averages. This means that overall the S&P 500 is bearish through the moving averages. But this is not that the interesting thing that I'm going to talk about. Okay, the interesting thing is that if you see on this particular day, on 13th of September, because this was a hollow movement, okay, this was the manipulated run. So if there would have been, okay, an exceptional news like that the inflation has come down by more than 2% or more than 3%, then only we would have seen, okay, the reversal on 13th of September. In that case, we would have seen the crossover in the moving averages, but that crossover did not happen. Rather, there came, okay, this is the slip. So there were these the moving averages, okay. The crossover was supposed to happen, and at one moment, okay, we thought that now it is happening, but then with this the heavy candle, what has happened is that one moving average has slipped, okay, on the other moving average. So this is my concept of slip. So I don't know, okay, if any of you have heard about the slip. Okay, see, as such the slip is not a technical parameter, okay. So this is based on my research. So I found, okay, that means this kind of thing, and I call it slip. Okay, if you want to call it something else, then you can. Anyways, I'm not praising myself that I have found this thing and I have called it. No, I'm simply trying to tell you that whenever such a situation is seen, okay, whenever we anticipate that a crossover is about to happen, but when the crossover fails, okay, in that case what happens? In that case, the movement, okay, in that case this is the bear movement, this was the bear movement, okay. In that case, that particular movement or that particular trend, okay, it then again comes into the picture, and this time it comes heavily. And that is the reason whenever the slips are formed, okay, the market, means the S&P 500 or the Dow Jones or the Nasdaq or any other stock or any other indices in the world, okay, so whenever they follow, okay, or they see, okay, this kind of slip, then there comes the heavy bearish sentiments. If the slip is formed in the bearish trend, if the slip is formed in the bull trend, okay, in that case there comes heavy bull trend, or there comes the heavy bull sentiment, okay. So this is the theory of the slip. Anyways, so this is the interesting thing. A crossover was supposed to happen, but then it failed. Rather, a slip has formed. This means now the stock market, or now this S&P 500 has again regained its bear movement, bear sentiments, but now at this time these bear sentiments are heavy, are very, very heavy. And if you see, this is what I have told to my members. On the 4-hourly chart, we have seen a slip formed in the moving averages that were earlier indicating a crossover. This is good for bears, as it's a kind of confirmation that more red is coming. Anyways, now let's talk about the next technical indicator. So through moving averages, it is bearish. Through Bollinger Bands, it is bearish. Means the S&P 500 is bearish through moving averages. S&P 500 is bearish through the Bollinger Bands. Now comes the Ichimoku cloud. Now this is again a good thing that has happened to the S&P 500, that finally it has closed below the Ichimoku cloud. This means through Ichimoku cloud also the S&P 500 is bearish. Now comes the next part. So the next part is the MACD. Okay, now again surprisingly, the slip was also formed in the MACD. Earlier a crossover was supposed to happen in the MACD, but it failed, and then okay, a slip has formed in the MACD also. So that was again a significator. Okay, now we are going bearish. So as of now, MACD is less than the signal. This means that the MACD is bearish. Okay. Now comes the next thing, and the next thing is the stochastic RSI. So if you look into the stochastic RSI, the K channel is less than the D channel. This means that the stochastic RSI is also bearish. Then comes the divergence in the closing prices of the candles. That is normal. Volatility, yes, volatility is volatility. Okay, it is increasing. So through all of the technical indicators, what we have seen is that the SP500 is bearish. SP500, it is technically bearish through all of the technical indicators. Okay, on the weekly chart, and also guys, it is not just bearish, but the S&P 500 is absolute bearish. I repeat, S&P 500 is absolute bearish, because all of the technical indicators are saying it is bearish. Not even there is no technical indicator, not even one, that is either neutral or bullish. All of the technical indicators are bearish. Okay, so earlier we have seen on the weekly chart that the S&P 500, it is heavily bearish, but there was the MACD that was technically bullish. Okay, so it was not absolute bearish on the weekly chart, but on the daily chart it is absolute bearish. Okay, this means that overall the S&P 500, Dow Jones and the Nasdaq, okay, these all are bearish. And let me show you, and let me also show you the chart. Okay, this is the weekly chart of the Dow Jones. Again, a kind of engulfing. Okay, not so this is the third candle. So this candle, okay, it will not be counted in this the engulfing. Rather, this candle, previous candle, it will be counted. Okay, in this the engulfing. Again, a very heavy, heavy red candle. Okay, this is the Dow Jones, and then this is the Nasdaq. On this Nasdaq, okay, you can clearly see a heavy red candle, moving averages again going to fall. So everything is going to come down. Okay, other than that, there is one more interesting thing in this the Nasdaq. So there is one more interesting thing in this the Nasdaq. If you see that the Nasdaq was able to hold above its 200 week EMA. Okay, so well, this does not mean that the Nasdaq is not going to come down. It can still come down, because earlier, okay, it was able to hold, then moved up, then came down, then hold above, then now it has come down, and it will further come down. So momentarily, okay, it will see some retraces back to this 200 week moving average, and then finally, okay, it will be coming down. Anyways, this technical analysis, okay, is not for the Nasdaq. It is for the S&P 500. Okay. But still, okay, I sometimes cover these things. Anyways, so the technical, so technically, okay, the S&P 500 is bearish on the daily chart, right? Now guys, before I give you the probable movement of the S&P 500 in the coming week, okay, I need to discuss, or I want to discuss the bearish breakout, because without bearish breakout, you will not be able to understand, okay, what is going to happen in the S&P 500. So guys, once again, if you have not yet subscribed to the channel, then please subscribe the channel and click on the bell notification icon in order to get the timely updates of the S&P 500 analysis, weekly analysis. And other than that, guys, if you want to join my YouTube community to get the daily analysis of the S&P 500 from Monday to Friday, in order to play safe, in order to make money, okay, just like my members did, okay, 1, 2, 3, okay, on these 3 days back to back, then you can join. I have given the link in the description and also in the comment section. Now let's talk about the bearish breakout. Okay, so earlier, if you notice that what has happened is that this was 2nd of September. 2nd of September, the S&P 500, it came down. Okay, it hit this the trend line, almost it hit the trend line, and there was a reversal. On 6th of September, it again came down, it breached the trend line, but the closing was at the trend line. Then next day, okay, again it was able to save itself, okay, because of the manipulators. Okay, then they moved up the entire, this the S&P 500 and the entire stock market, and all other indices like Dow Jones, Nasdaq, okay, and all other, these the indices. Then finally it came down, and again surprisingly on 13th of September, it was able to close at the trend line. Okay, again surprisingly. Then on 14th of September, it was able to close above this the trend line. But this was exactly where I told my members that, see, for a day or two, okay, you can see that it is holding, and this will be normal because the S&P 500 has just lost 4.35%. Okay, it has just lost 4.35%, and after this, okay, this is a very after this the very heavy loss, we can expect a breather. But this kind of movement, okay, on the 14th of September, it will be confined. So if you are an option seller, in that case you are going to make money. Okay, but if you want to buy options, okay, in that case you can use any retrace. Okay, retrace to retrace to 3965 levels, and so you can use this retrace, okay, as an opportunity to go bearish. And this is again my members, okay, they have participated in this the bear trade, okay, in this the bear run. On this the retrace, they have entered, so they have entered with the short position, the put options, and then they made money. Okay, so this thing, okay, it was the breather, okay, after a fall of 4.35%, nothing else. Okay, now this was again a trap. Why trap? Because earlier it was able to hold above the trend line. Market manipulators, they were able to convince the retail traders that it is moving up, and retail traders, okay, they have lost a lot of money, hundreds of millions of dollars, okay, collectively. Okay, and now when so on these 2 days, on 13th of September, on 14th of September, okay, it was able to hold above the trend line. Okay, so again there was an impression in the market, overall market, in the S&P 500. Okay, and many analysts, okay, they were saying that now it is again going to hold, and it will see a reversal, okay, a bullish retrace. And this is where exactly I told my members, no, this is not going to happen, rather this will be the movement. Simple. Okay, so this is how my members, okay, they made money. Anyways, so this was again a trap, because people, okay, they were expecting that it is going to move up. Okay, and indeed, okay, it tried to move up, but again it was a trap, and then it came down heavily. So again many retail traders, so this was a second trap. Anyways, now the breakout, this thing, okay, now if you see this particular candle that was formed on 15th of September, so what you are going to notice, that the open and the close, okay, was below the trend line. Open and the close of the candle was below the trend line, right? And secondly, close was below the open. What it means? This means that it was a bear candle. So what we have noticed is that this particular candle on this 15th of September, first of all, the open was below the trend line. Second, the closing was below the trend line. Third, the close was below the open. Fourth, it was a heavy red candle. Fifth, and the most important thing, is the Ichimoku. This is the boundary of the Ichimoku, and it closed below this the boundary of the Ichimoku. Okay, so these were the five factors. Okay, that has constituted, or that has confirmed a bearish breakout, right? And this is exactly, okay, before the closing of the S&P 500 on 15th of September, I told my members, go bearish. Okay, do not worry about anything, go bearish. So if there comes a little reversal, then also, okay, you need not to worry, because eventually whatever happens, gap up, gap down, okay, reversal, means whatever happens, you are going to see a good red candle on Friday, on 16th of September. That was confirmed. Because of these the five factors, the S&P 500, it was able to close below this okay, this is the trend line, okay, and then it went bearish again. Okay, a red candle. back to back two candles, two consecutive closings below the trend line in normal terms, okay, we call it as the confirmed bearish breakout. Okay, we are talking about the bearish market, so we call it as the confirmed bearish breakout. Now there are only two ways this bearish breakout can work. Okay, number one, what happens usually is that whenever there comes a bearish breakout, then after some time we see a retrace. Retrace to what? Retrace to the trend line. Okay, retrace to the trend line. It will hit the trend line, okay, then it will close below the trend line, and then finally it will begin its long journey, okay, towards the other levels. But what I think is that seeing a reversal back to 3965 levels, okay, or 3990, okay, as of now it looks difficult, okay, or it looks less likely, because if you see 1 2 3 3 days, then 5 days, because the S&P 500 has already got enough support for 5 days on this the trend line. Okay, this means that as of now it should come down further before it can see any reversal. Any reversal will be constrained to the trend line. Now comes the second part. The second part is that this bearish movement, this bearish breakout, okay, because this is a heavy bearish breakout, it will continue either to this level or to this level before it can actually see a retrace. Okay, so it will continue, it will fall, and then finally it will see a retrace. Okay, whenever it will see a retrace, now this time, see, because by that time, okay, it will think about, the retrace, it will come down a lot. This means that even if you think about the retrace, then from this level also, okay, a retrace will be like 4%, okay, or from this level a retrace to this level will be like 6%. So 4 to 6% reversal, okay, this means that there must come, some kind of good news, okay, or the technicals must, or the technicals, okay, must support that thing. Other than that, okay, next month, okay, we are going to see the companies. So companies will be posting, okay, their quarterly reports, their quarterly results. Okay, so if the quarterly results, okay, if the quarterly results come good, okay, then also we can see a retrace. But so as of now, a reversal like 6%, 5 to 6% reversal, okay, no, because the retail traders, they have already lost a lot of money here. Without manipulation, 5 to 6% is not possible. Okay, so this means that because of this the breakout, okay, the first condition, okay, a reversal and this thing, okay, this is less likely rather than the second condition, that it will first come down and then it will see a retrace back to, this level. This is what 3840. So now the 3840, okay, in the coming week or weeks will act as a strong resistance, very strong resistance. Okay, so that will be limited to 3840, and then finally it will come down. So this is with the bearish breakout. Now is the time to discuss the probable movement of the S&P 500 in the coming week. So now, like, what is going to happen to the S&P 500 in the coming week? Okay, that will be the week of September 19th, 2022. Okay, so what will happen on Monday, Tuesday, Wednesday, Thursday, and Friday? Means up to September 23rd, 2022. So we need to discuss each and everything, okay, one by one. So now, guys, let me clear, okay, a few things. Number one is that this thing is confirmed, what? That we are going to see a gap down open on Monday. Means either we are going to see a gap down open on Monday, or we are going to see, or we will see that irrespective of the open of the S&P 500 or the Dow Jones or the Nasdaq, okay, first the S&P 500, it will come down. Okay, so later after 1 hour, after 4 hours, okay, it can try to move up. So that's a different thing, that's a different part. So if you are my YouTube community member, okay, then I will give you the update, okay, and I will tell you whether we are going to see the retrace or not, and if there comes a retrace, then to what level, okay, it will be restricted to. Anyways, so this thing is clear that we are going to see a gap down open on Monday, or irrespective of the open, we are going to see, okay, a downward movement. Now, the second thing is confirmed that in the coming week, okay, we are going to see a red candle. What? A red candle. A red candle on the weekly chart, not on the daily chart. I'm not saying that you will see a red candle on Monday. Okay, yes, there are chances that there will be a red candle on Monday, but I'm saying that red candle on the weekly chart. So just like this thing, okay, so if you see this is what, this is Nasdaq, okay, a big red candle, okay, on the weekly chart. So similarly, what I'm saying is that in the coming week we are going to see a red candle, Now the shape of the candle, whether it will be, you know, whether it will be a doji kind of candle, okay, or a heavy bear candle, etc. So I will confirm, okay, this thing on Wednesday, most likely on Wednesday, okay, to my community members. So if you are my YouTube community member, then you need not to worry about this thing, okay. I will tell you most probably on Wednesday, okay, what kind of red candle we are going to see, and accordingly you can plan your trades, okay, and you can make money. So these two things are clear. Now other than that, there is one more thing, okay, that is also clear, okay, or means that is most likely to happen is that if the S&P 500 fail to give any reversal or any good reversal, then in the coming days chances of seeing a reversal back to this, the trend line will be diminished, okay, will be very, very less, okay. So the chances of the retrace, okay, so the chances of the retrace, okay, will be very, very less, okay. So these are the three things that are kind of confirmed, okay. Now how the S&P 500 is going to behave, okay. So first of all, as we know that on Monday we are going to see a gap down open, or irrespective of open, it is going to come down. Means if the open of the S&P 500 is above 3840, what is 3840? It is our support as of now. If the open of the S&P 500 on Monday is above 3840, in that case what will happen? It will come down, because it has to. It will come down. It will find support here. And thereafter it can try to retrace. Okay, thereafter it can try to retrace. Again, guys, do not forget that the technicals are bearish, sentiments are bearish. Okay, so after hitting this, the 3840, because earlier, okay, on 16th of September, S&P 500 has found a very, very good support. This means that on Monday, if it is able to sustain, then it will find some good support, and it can see a reversal, right? Whenever there will be this reversal will be confined to, or this reversal will be restricted by 3884, okay, the initial resistance. And then what it can do, then either it is going to come down again, okay, intraday only, or it is going to move up. Now when it will move up, in that case it will create an opportunity for all of them who have failed to enter in the S&P 500 in time. Because in this bearish market, okay, any retrace is an opportunity to go bearish. Chances of seeing, okay, a very heavy upward movement, okay, are still you know, very, very less. But again, if there comes a retrace, then the 3937 will be able to hold this retrace, because we have this the consolidation zone, okay, at 3937. So as of now, so even intraday it will not be able to breach the 3937, okay, because even if it tries to, in that case it will have to move up by 1.5%, means very, very heavily. It should move up by, you know, very heavily. So as of now, 3937 should be able to hold. And if somehow, okay, surprisingly, if on Monday, if it is able to close, okay, means if it is able to give a closing, okay, through this a green candle on Monday, in that case on Tuesday the S&P 500 will be easily able to hit the trend line, okay. And then whenever it hits the trend line, then again it will begin it will resume its journey towards 3500 or 3000 itself. So there is the upward movement. Now this upward movement, okay, chances of happening the upward movement are very, very less, because overall the market, the sentiments are bearish. Secondly, okay, we have on 21st, okay, we have this event, okay, when the Feds will raise the interest rates. This means as of now there is no good reason in the overall stock market and in the S&P 500, okay, so there is no good reason that it should move up. But however, if it moves up, okay, either through technicals, okay, or through any good news or through manipulation, then it will create an opportunity for you to go bearish, because eventually it is going to come down, okay. Now comes the second scenario. The second scenario is that even after open above 3840, okay, it comes down and it gives up and it breaches the 3840. In that case, forget about this thing, focus on this thing. Okay, it will come down to what? To 3790. Because see, any downward movement, if you see that earlier what has happened is that this is the 3790, it has acted as a very good support and resistance. Okay, most of the movement was there. Okay, other than that we have seen also the movement here, okay, at this level, which is our 3737. Okay, this means that 3790 is going to act as a very good support, and the bounce, okay, or the retrace that we are waiting for, that we can see from 3790 itself. Okay, our retrace. If our retrace comes from the 3790, it will be immediately restricted to 3840, and then after hitting the 3840, then again it can come down. Okay, so the chances of seeing a reversal, okay, up to this, the trend line will be there mostly if it is able to survive, means if the S&P 500 is able to survive, if the S&P 500 is able to hold above the 3840 on Monday, then only we can anticipate, okay, that yes, it can move up, okay, in the coming days, and it can hit that trend line and it can create a perfect opportunity. See, earlier this was the lower high. Okay, as of now, if a lower high is formed here, so that will be good. Okay, one lower high here, other lower high here, then the next lower high will be here. Means first it will come down and then it will see a retrace lower high, and then further, okay, it will come down. Anyways, so whenever it comes down 3790, okay, a reversal from 3790 to 3840, then from 3840 it will come down. Okay, however, if it is able to breach the 3840 and if it is able to close above the 3840, then also we can expect, okay, that yes, it has some potential to move up to hit that trend line. Okay, so this was with this the open, okay, above the 3840. Now let's see what is going to happen, okay, with this, when the closing is below the 3840. In that case, what will happen is that because the closing will be below 3840, and 3840, as of now the 3840 has acted as a strong support, any open above 3840 means that the sentiments are extremely bearish, and that because the S&P 500, it failed to hold above 3840, and that is why, okay, it is giving an open below 3840. So what will happen? Immediately upon open, it will come down. First a gap down open, and then immediately upon open it will come down. Now again it will come down to 3790, right? 3790 is what? 3790, okay, it is a good resistance, sorry, it is a good support. So it will hit the 3790 and then it will see a retrace back to, this retrace will be back to 3840. Now we will have to see whether it is able to hold above 3840 or not. Okay, if it struggles a lot at 3840, in that case, okay, again that downward movement, so it will then resume the downward movement, then to 3737 and then to 3675. Okay, other than that, okay, if it is able to breach and to close and if it is able to close above the 3840, in that case it will create an opportunity again, or we can see, okay, or we can say yes, there are chances that we can see a retrace up to at least 3937, okay, or at most, okay, up to this level, okay, like 3965, okay, 3965 is our intermediate resistance, okay, this thing. So when the open is below 3840, in that case, okay, this thing is clear. So there are only these two possible movements and nothing else. And guys, other than that, okay, we have this, that 21st of September. Okay, so on 21st of September, the movement of the S&P 500, the movement of the Dow Jones, the movement of the Nasdaq, and the overall stock market and the global stock markets, okay, it will be very risky, extremely risky on that on this 21st of September, because this day the Fed chairman, okay, will announce this rate hike. Okay, other than that, the Fed chairman will also so he will also, you know, answer the questions, okay, and that, you know, 30 hours, sorry, that the 30-minute session, okay, So this 30-minute Q&A session will go the market crazy. Crazy movements will be seen in the S&P 500. Intraday we can see very heavy fall. Intraday we can see very heavy trade. So a lot of things can happen on 21st of September. So if you are my YouTube community member, then you need not to worry about it, because on 21st of September I will give you frequent updates and I will tell you what is going to happen, okay, where to capture the opportunity, okay, and where exactly to book your profits, okay. And for all others who have not joined my YouTube community, okay, then my advice for them is that yes, you can trade, but try to avoid trading on 21st of September, okay, because you won't be getting any support. You'll be seeing the news will be, it will be updated frequently. Many people will say many things, the different things, so you will be confused, okay. And 21st, okay, it will be a risky day. So again, to all, okay, who are not my YouTube, okay, my YouTube community member, okay, because they won't be getting any support. So it is my recommendation, okay, it is my advice to them to avoid trading on 21st of September. And if still they want to trade, then please use the stop loss, very tight stop loss. So guys, once again, if you have not subscribed to my channel, then please subscribe my channel and click on the bell notification icon, so that whenever I update this the weekly technical analysis and other informative videos of the S&P 500, so you will get the timely notifications, right? And other than that, guys, if you want to join my YouTube community, then I have given the link in the description and also in the comment section, so you can take a look. And guys, last but not least, like if you like this video, comment if you want to ask any question, share with your friends, so that, and then finally you can subscribe to get the weekly technical analysis of the S&P 500 and all other informative videos. So guys, this was my S&P 500 weekly technical analysis for the week of September 19th, 2022.